Why is the Canadian dollar, affectionately called the loonie, losing value while the US economy seems to be on fire? Are we heading for a financial storm, or is this just a temporary dip? In today's video, we'll break down the real reasons behind the loonie's drop, how the US economy plays a role, and what it means for your wallet. Stay tuned. This one's important. Welcome back to the channel, everyone. Today, we're diving into a topic that's affecting every Canadian. Why is the Canadian dollar, or the loonie, dropping while the US economy is heating up? This isn't just about numbers on a stock ticker. It impacts your grocery bill, vacation plans, and even your savings. In this video, we'll simplify the economic jargon, explore the root causes, and give you insights from top economists on what might happen next. So, grab a coffee, hit that subscribe button, and let's get started. Why is the loonie dropping? The Canadian dollar has been losing value against the US dollar, and the main reason boils down to one word: interest rates. The US Federal Reserve has kept interest rates higher for longer, attracting global investors to the US dollar. In contrast, the Bank of Canada is signaling a softer stance on future interest rate hikes. When investors see higher returns in the US, they pull money out of Canadian assets and move it south. But that's not all. Canada's economic growth is slowing. The US economy, driven by strong consumer spending and robust job markets, is outpacing Canada. Simply put, investors follow growth, and right now, the US looks like a better bet. How the US economy is burning hot. The US economy has been surprisingly resilient. Here's why. Consumer spending. Americans are still spending big on retail, travel, and housing. Strong labor market. Unemployment in the US remains low, and wages are rising. Government investments. Huge investments in infrastructure and green energy projects are keeping the economy humming. This growth means more demand for the US dollar, further pushing down the value of the loonie. It's like a seesaw. When one currency rises, the other tends to fall. What does this mean for Canadians? So, how does all of this affect the average Canadian? More expensive imports. Products priced in US dollars, like electronics, cars, and even some groceries, will become more expensive. Travel costs. Rise. A weaker loonie means vacations in the US or other countries that use the US dollar will cost you more. Higher inflation pressure. Imported goods becoming pricier adds pressure on Canada's inflation rates. But it's not all bad news. Canadian exporters benefit because a weaker dollar makes Canadian products cheaper and more competitive globally. Industries like agriculture, forestry, and manufacturing could see a boost. What can be done? So, can anything be done to stabilize the loonie? The Bank of Canada could raise interest rates again, but that risks slowing down an already fragile economy. On the fiscal side, the government could focus on policies to drive economic growth and attract foreign investment. As a consumer, the best thing you can do is stay informed, reduce unnecessary USD-based expenses, and consider investing in assets that benefit from a weaker Canadian dollar. Expert opinions. Leading economists predict that the Canadian dollar might continue to stay under pressure for the next 6 to 12 months, depending on how the US Federal Reserve acts. If the US maintains high interest rates, the loonie will struggle. But if Canada sees stronger than expected economic growth, we could see a recovery. It's a delicate balance, and only time will tell how it plays out. The dropping loonie isn't just a financial story. It's a reality that affects every Canadian. While the US economy continues to heat up, Canada faces the challenge of balancing growth and inflation. If you found this video helpful, don't forget to like, subscribe, and share it with someone who needs to understand this situation. Drop your thoughts in the comments below. Do you think the loonie will recover anytime soon? Thanks for watching, and I'll see you in the next video. Stay informed, stay empowered.